Hey everyone, it is time for our expert series. It is Monday, and of course, we start off strong. We got Greg Dickerson on the road again. How you doing, buddy?
Doing great, Michael. How are you? Mondays with Michael.
I love that. I may actually use that as a title for one of these videos. It's pretty awesome. Um, I want to rewind to something you said at the tail end of our interview last week. It was
hmm
so good. I wanted to dive in, but we were both short of time, so I left it for this week. And you basically said now is the time to stack cash. So let me kind of reset where I think we were, and then we'll kind of dive into that more. We were basically talking about, the stock market being a bubble, Bitcoin being a bubble, just all of these things being just just incented higher by the Fed's behavior, and now Janet,
housing market,
all
commercial
of that.
assets. Yeah.
All of that stuff. So I wanted to dig into that, what that meant for you. What does Greg Dickerson do, or what does he suggest when you say it's time to stack cash?
So, stacking cash obviously is warehousing cash, keeping it, on the side, but readily available. So I've always been opportunistic. And the one thing that is really interesting about my career is whenever I deploy cash, then I find something and I need it, so it's kind of like, dang it, I wish I hadn't have bought that because now this popped up. So stacking cash means compounding cash. It's the velocity of cash flow. I've always been, a landlord of cash, a landlord of money, versus holding properties long term and being a landlord in that regard. Even if you refi, pull your cash out. I mean, I've done all that and I've had properties over the years and things like that. But at the end of the day, cash is king. Okay. And, a lot of people say that, cash, the dollar is going to be devalued and it's going to be trashed and worthless. Whatever you buy, you're buying with dollars. Whatever it is, whether you're buying gold, Bitcoin, this, that, and the other, it's all valued and based off the dollar. You need a dollar to buy it, and at the end of the day, if you're going to get rid of it, you're exchanging it for cash. Now, people are trading Bitcoin for services and,
Mm.
cars now with Tesla and things like that, and as digital currencies become more and more prevalent, those types of things are going to transpire and take place. But at the end of the day, the US dollar is going to be digitized. The federal government's not going to allow any other currency to take hold and to reign supreme. So stacking cash means keeping your cash readily available. It can earn a little money while it's being, waiting to deploy it
Mhm.
and to utilize it. But basically, what you want to think of is compound your cash. How can you compound that cash? Use the velocity of cash flow, get in and get out, and keep stacking, keep stacking, keep stacking.
All right. So again, I want to just peel this back a little bit farther to make sure I understand it. So, for example, compounding cash. When I hear compounding cash and stacking cash, I translate those as different things, but I think I got it now. So you're basically saying you're warehousing cash, but you will deploy it into something that you see a return in a short time frame, right? So a 6-month project, a 9-month project, you will get your cash back and it will bring some friends, right? That
Or
is,
even a 1 month, something that can compound it
yeah,
quickly. So you stack
short.
and you warehouse in order to deploy to then compound. So, it's that ROI over time. So if you take, a pile and you put it into something and you pull it out quickly, you've got a small return. But if you keep doing it and keep doing it and keep doing it,
Got it.
then maybe a 10% return over 30 days becomes 1,000% return over a year if you do it multiple times,
Right.
like flipping houses. So if you're using cash to buy, sell, we're in a hot retail environment right now. So you can speculate. All right. So I want everybody to be careful what I'm saying.
Mm,
I've always been one to lead the market up and lead the market down. Okay. So I'm not saying buy now thinking and having a business plan, buying at the top of the market, overpaying because it's such a speculative market, you can resell for more tomorrow.
mm.
I'm not telling you to do that, but I'm telling you that's going on. And this is the kind of market you can do that in. So that's how you can lead a market up. So if the market is so hot, if you've got in the right areas with the right product in terms of houses, let's just talk about housing. You can buy a house at the peak of the market right now, pay, outbid everybody, be multiple bids, and probably turn around and flip that house tomorrow for a small margin. So if you could do that 10 times, 12 times during the course of the year, you're compounding your cash on cash that was stacked off to the side.
Got it.
So this is the kind of market you can get away with that. You got to be careful and you got to watch. There's going to be pockets everywhere, but you can be a little bit more aggressive and a little bit more speculative right now in real estate, in other types of assets if you're understanding or following the markets and know what you're doing.
Mhm.
But when it switches, you got to go the other way around. So as prices are falling, you got to buy at deeper discounts so that you can in turn sell,
Mm,
at a little bit higher as the market's going down. So you lead it down, you lead it up, you don't chase it.
got it. All right. So when I hear stacking cash, it's not the, I guess how I translated it last week, and I didn't think it was right, was, hey, I'm gonna take X dollars. It's 10, it's 50, it's 100, it's a million, whatever it is. I'm gonna put it over here and just not use it. That's not stacking cash in your mind. That is
No.
use it, deploy it quickly. And I guess let's define quickly. Totally get a month, totally get 90 days. What is too long? Is a year too long? Is it 3 years too long to get that money back? When you in this environment, what is that? What's kind of the end point for a time frame, you think?
Yeah, it depends on what you're talking about, what asset, what class, what area, what
Mm,
market, all that kind of stuff. But housing, I don't want to be in anything residential longer than 3 or 4 months right now,
okay.
because I'm not a long-term hold.
Yeah.
Okay, if I'm flipping, I want something that's going to be in and out in less than 90 days because the real estate housing market can change that fast.
Oh yeah, we've seen it.
Um,
Yeah.
it can change in 30 days, but you know, you're I'm comfortable with 90, but it can
Okay.
change quickly. If you're talking about a commercial asset, I can go a little bit longer term. If it's commercial multifamily, I can go a year or two. If it's a development project, I can go a
Okay.
year or two. But more specifically, I'd like to be less than a year, because
Okay.
those types of assets can change in a year or so. If you're talking about markets and Bitcoin and stuff like that, I mean, that's daily. You
Yeah.
you got to watch that stuff every day.
Yeah, we're gonna leave that stuff to the side because I'm a real estate guy, not all that other stuff.
Yeah.
So I just want to go back. I'm going to use the same concept, stacking cash, in a totally different market. So like 2010, which again was the time that was the best for me to buy. Prices were depressed. If under the guise of stacking cash, you're not a long-term holder, would you be willing to deploy cash at deeply discounted price and then extend the time? I'm most thinking housing, right? Housing was 50 or 60% off in some markets. Would you deploy a lot of cash thinking that the return is 2 or 3 years out, or would you always want to be 3 to 6 months with residential stuff?
Yeah, so right now with the way prices are, it depends on what you're buying at, and what you got to look at is where were the values before the spike.
Got
So
it.
you got to go back to that and buy at a discount based on that, because what we
Mm,
need to expect is when interest rates do stabilize and when they do rise, and rates have been on the rise. Somebody asked that question, says, we've talked about rates increasing. They're like, where do you get that information? Just Google interest rates,
yeah, I
housing
look at it daily.
housing market. Yeah, that's all you got to do is just Google it, and you'll see where the interest rates. You'll see what the Fed's talking about doing, and their rate is very different than what mortgage rates are based on. Yield curve, bond rates, and Treasury yields are what mortgage rates are based on. So you got to just Google that term, and you'll find out, and you'll be able to stay ahead of the trends and watch it. But um, it's and I guess stacking cash just means building your cash. It
Yeah,
just means building up your cash. It's not anything specific. It just means when I'm literally thinking about stacks on stacks, right?
right.
That's what I'm talking about.
Yeah, I get it. So let's flip the script and tie into a question you and I have got from a follower of our channels. And this is under the guise of cash, right? Does cash equal savings, checking, money market account? I'm going to say yes. Is cash a mutual fund? Is cash stocks? I mean, where does the line go where it's no longer cash, it's something else?
Yeah, and I can't remember what the specific question was. Something about
I'll get
do
to that in a
interest
minute.
rates.
I'll get to that next.
Okay.
But let's end. Where does obviously cash in a checking or savings is still cash. I'm assuming yes in money markets. But is it cash in a stock market or a bond market?
You know, um, bonds are going to be longer term because you're buying a term on a
Mhm.
bond. So that's not liquid cash. No, when I'm talking about cash, I'm talking about liquid. So,
Okay,
money market, savings account, checking account, things like that. You want liquidity, you want easy, quick access to the money.
got it.
But bonds are not that. CDs are not that. You got to lock it up for a certain period of time.
Perfect.
So that's not liquid.
Got it. So let's go to the exact question we got. We have a viewer that said, "Hey, I'm in a van. I think it was a Vanguard mutual fund." And really their question was, "Hey, okay, I'm in a fund. What is going to be the impact of inflation or deflation on this fund?" And I'm like, "Well, I'm not a individual stock guy. I'm not sure what's in the Vanguard fund. I'll give you my opinion first, just because I've had longer to think about it." I'm like, "Well, if you're talking about inflation, these are companies that are publicly traded. They're going to have input costs, both labor, commodities, all of these things. So in an inflationary environment, their inputs are going to go up. But again, they're a public company, so they can raise prices. My guess is input costs will rise faster than their prices. So the answer will be they will collapse profit margins. Again, was my guess. But again, a mutual fund, an index fund, these are kind of big diversified buckets of things that will generally speaking just follow the market, right? They'll just follow the US economy. They're so big and diverse. They won't see huge spikes or huge declines. I don't own any mutual funds because I want to be able to, I make individual asset choices. But I don't know. That was the question we got, is what's going to happen to my Vanguard mutual fund? And I'm like, I don't know. This is what I think, I guess.
Well, you just have to look at the history and what has happened, and specifically in 2008 and 9. So,
Hmm.
mutual funds, index funds took a hit just like the market.
Yeah.
So they are tied to the market. Interest rates right now, the monetary policy, that's what's driving the market. That's the sole thing that's driving the market. Everybody at every level is telling you that, and it's intentional. The government wants to keep liquidity out there. They want to keep it robust. They're not worried about the asset bubble that's being created in markets. They're not. And interesting enough, I heard Janet Yellen in an interview today. It was a behind the scenes kind of a thing, deal book up in DC, where she was talking about the debt to GDP ratio and where it can go.
Hmm.
And she, like you and I have talked about on this channel, she said the words. She said, we are servicing the debt of the US, and it's a very small percentage of the GDP. We can service a much bigger debt.
Oh,
So you and I have talked about how big can the debt actually, not the deficit,
yeah.
how big can the debt actually get? The national debt. Right now, we're running a very small amount when you look at the cost of the money in terms of what we could actually borrow.
Hmm.
And debt to GDP right now, I don't know what level we're at right now. I can't remember what she said, as of today. But, when you think about your own personal borrowing power, when you buy a house, you buy 3 times your income. So if you think of the GDP
Hmm.
in terms of the debt that we could service as a nation, we literally could run up a debt 3 times the GDP
No, that's
at
scary.
these rates.
Yeah, at these rates, yeah. Oh, that's scary. There's no question Janet Yellen wants to spend. She's a labor economist. She's fixated on 3.5% unemployment, which is what we had when we came into this. And she is going to spend, spend, spend. It frightens me.
Well, it's interesting. We're hearing universal base income. So some people call it basic. It's, universal base income is basically everybody in the country guaranteed a minimum income.
Yeah.
So everybody in the country, you're going to get 50 grand a year from the government minimum. I'm not saying that's the number they're talking about. I'm saying this is how
Yeah.
it works.
Yeah.
No matter what you earn, no matter what you do, everybody gets the same base income, so that you don't have to worry about your basic needs: housing, food, clothing, shelter, those types of things, water, gas, all that good stuff. Then you can go out and do whatever you want without having to worry about that pressure of earning. So
Hmm.
that is, every day you're starting to hear more and more about that coming out of DC.
Well, the only thing I know if that ever happened is I want to own a lot of rental properties if that ever happens.
Mm-hmm.
That's because
Yeah.
that's going to go up. Well, the last question on this topic is a personal one. So I want to kind of set the stage and ask, what would Greg do? So let's just say you owned an asset, a house, a apartment, whatever it is, free and clear. Pick a value, pick 400 grand. Own it free and clear. I don't know. Let's just say it's a 1% rule. So it rents for 4 grand a month, right? 400 grand rents for 4 grand a month. You have no mortgage payment on it. And you don't need the money. You already have plenty of cash. And you're going to keep it. So you're not going to sell it, Greg.
Mm-hmm.
You're not selling, Greg. What would you do in today's environment? Would you go and get a 30-year mortgage at like, a 50% LTV just to get more cash? Or because you had enough, it's like, because cash, I mean, kind of the worst thing to have today, I think, is cash. But I just wanted to get your thoughts on that. What would you do in that kind of situation?
I would lever it up as much as I could, non-recourse if I could, interest only for as long as I could. And
Really?
that's where it's at. Oh yeah, I don't leave cash tied up in assets like that, because
Ah,
it's at risk. And
yeah.
I know the philosophy out there is that people don't want to be in cash. And the people that are telling you that are the people that are selling you the instruments to put your cash into. So cash is king. It always has been. It always will be. And at the end of the day, if you need to liquidate, what are you gonna liquidate for?
Hmm. Yeah.
Cash. If you needed money right now and you had to liquidate, okay, and I came to you with a Bitcoin, you gonna take a Bitcoin or you gonna take cash?
Yeah.
I mean, you have got to survive. You got to go buy food, clothing. You're going bankrupt. Everything you have, you've lost. You need cash now. You got that house that's paid free and clear. Are you going to trade that for Bitcoin with me right now? Or are you going to trade it for cash
Yeah.
or gold or
Or,
whatever?
yeah, or
You
whatever.
see what
Yeah.
I'm saying?
Yeah. Seashells or
So
sand or whatever. Yeah.
the
I
other
got
thing to remember, and we talked about it last time and we hit on it, is okay. So everybody, people think free and clear is the way to go just because of cash flow and all that. That's great. But if you own 100% of something and you have, you own it 100% free and clear, it's at risk. It can be taken away.
you.
If it's levered up, ain't nobody going to come for it.
Got it. Very cool. All right.
That's the one thing I learned in 2008 and 9. The more you owe the bank, the better position of strength you're in.
There you go. There you go. Well, this has been a great conversation. Now I understand what you meant by stacking cash. I appreciate you. Thanks.